So talking about investors, how many different types of investors are there, and where can startups or entrepreneurs get their funding from? I mean, VCs, angels, but if you could talk a little bit about each of those, I guess, and banks and any other source.
Yeah.
And remember, think of me as someone that has never heard of any of this stuff.
Yeah. That's a very good question, actually. There are numerous routes to getting financing. In fact, I think founders and startups nowadays have a hugely greater opportunity than existed many years ago. Especially the ecosystem in Silicon Valley is extremely broad. So you have angel investors at the smaller end of the scale who will typically invest $20, $25, maybe $50,000. Some obviously can invest more than that. You've got family offices, you've got venture capitalists, and then the scale goes all the way up to private equity firms and so on.
Can we step back? Tell me about an angel investor. What is an angel investor?
An angel investor, again, there are different sorts. Sometimes you have angel investors who worked at larger corporations, and they perhaps have excess time, or they have excess cash available, and they think, okay, I can invest in something that sounds interesting, or that through their work they think they know a little bit about. And then you've got perhaps successful entrepreneurs who've actually got previous successful startups that they've maybe sold, and they bring with them certain areas of expertise, whether it's a certain vertical, say artificial intelligence or machine learning, in robotics, in fintech, all sorts of other areas like that. Or it could be a specialization in terms of what they're doing, for example, marketing, in terms of maybe certain engineering skills they have, and so on. And they will typically try and invest in those areas where they can apply, and they can help the founders and startups with their expertise.
Okay, so an angel investor mentioned checks between $25,000, possibly $50,000, maybe a little bit more. They might have been successful entrepreneurs or industry experts. What about the other groups you mentioned? You mentioned family funds. What's a family fund?
A family fund is essentially a fund which has been put together by a successful either founder or families. So sometimes you even have 2 or 3 generations of families that have been operating a particular business. And if they've perhaps sold that business or generated significant amounts of cash from that business, they'll put it into a fund, and then certain allocations will be decided upon. They could decide to put some in very secure investments. They could decide to put a portion of the fund into more risky investments, which it would include early stage startups and so on. So those are generally referred to then as family funds. And you've got single family funds, you've got multi-family funds. Multi-family funds being, for example, several families getting together and saying, okay, this is going to be one fund, and that they then again decide upon where their joint interests are, and invest accordingly.
Okay, and then you also mentioned VC. VC, what does that stand for?
VCs are venture capitalists, and again, there's a wide range of venture capitalists. Some have interests in a particular vertical, again, like the verticals I mentioned. So it could be ag tech, fintech, med tech, health tech. There are all sorts of techs. Right. Or it could be in a geographic area that they tend to focus, or it could be a particular stage of investments that they focus on. Right. So stage of investments could be pre-seed, very early stage, where it's just an idea, to seed, and then you've got A rounds, B rounds, C rounds, D rounds, and so on, all the way until maybe a company is very large and could potentially do an IPO.